Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, June 10th, 4:38 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend as of May 6th. Check the trend gauge over here. The only change from last week is the yellow sub arrow under leaders taken away. Leaders had a very strong day, far outperforming the indexes as money flowed back into the AI hardware data center names. This despite Apple having a big developers conference and kind of an underwhelming result there, as Apple ended up down 1.9% on the day. Just may have been a case of it running up into this event and pulling back, as nothing really earth-shattering came out of it from an AI standpoint. As far as the five major indexes go across three time frames, still major outperformance by the S&P 500 and NASDAQ 100, underperformance by the Dow, although did slightly close above the 21-day moving average today, but still below the 50-day. Mid and small caps, a nice bounce today. They gapped down, closed green, so good recovery on the day, but still underperforming. All five of the major indexes still above the long-term 200-day moving average. So what happened today? Early weakness with the gap down, but turned green. We had right out of the open, we put a low in 15 minutes into the day, rallied for about 3 hours, then chopped around as there was some volatility caused by different things being said or not said at that AI conference by Apple. But bottom line, a good day, especially for leaders, definitely outperforming on the day. Here are the final numbers. The 21 over 21 leaders list. We'll review the new list for the week at the end of today's video. 16 up, 5 down, up an average of 1.95%, led by CrowdStrike, which was added to the S&P 500, up 7.3% on the day. That's our largest holding in our flagship GROTECTION portfolio. The big eight, despite Apple and Tesla both lagging on the day, up an average of 0.25%. The RG8 is our 8 growth ETF composite. You know, leaders had a good day when the IBD 50 ETF was up 2.2%. RG8 up on average 0.78%. S&P 500 opened down 0.2, closed up 0.25%, about in line with the equal weight. NASDAQ 100 opened down 0.3%, rallied to a 0.4 gain, equal weight, pretty much in line with that. Dow up 0.2, mid caps and small caps rallied from red open. In fact, small caps gapped down 1% at the open, but rallied to a green close. Mid caps up 0.19, small caps up 0.25%. Global diversified 60/40 up 0.05%. Bonds pulled back today as interest rates rose a bit. Our flagship portfolio up 1.1%, showing some outperformance today. Let's get to the indexes. You can see basically what we've been doing. I'll go to a 15-minute chart here. Is after this 4-day up move off the bottom, let's draw some lines here. After this 4-day up move, last 3 days, we've been consolidating at the top of the range, not giving much back. Pullbacks being bought, holding that 53.30 level, and 53.75, the high from Friday afternoon. See if we can surpass that this week. Move to the NASDAQ 100. Same situation, consolidating for 3 days after 4 days up at the bottom. Onto the Dow, which had been lagging for quite a bit. Still lagging on a relative basis, but this is a nice bounce off the 38,000 level, not relatively speaking, but it improves the look of the chart, reclaiming the 50-day today, running into the declining 21-day. S&P 400 mid-cap index, bouncing at the 2,900 level after gap down, closing near the high of the range, but still below the declining 21 and 50-day moving averages. And the Russell 2000 small cap index also gapping down and bouncing, but also below the 50 and 21-day moving averages. Those are the 5 major indexes. Onto interasset correlation, the VIX closed at the low of the day, but still up 4.3%. The dollar, US dollar, gapped up and closed at the bottom of the range, but didn't really provide much of a headwind as stocks continued to rally today. You can see closing above the 50-day moving average was the dollar, and that's a big bounce off that 104 level for 2 days now. Onto precious metals, gold, 0.9% inside day versus that big move down on Friday for precious metals. GDX up 1.46%, and silver up 1.69%. Again, big moves down on Friday, just minor recoveries off of that. Definitely looking for some more strength there. Coin up 0.43%. That had a negative reversal on Friday as well, and that's an inside day, but it's still trending above the 21-day moving average. On to bonds, the broad bond index down 0.15% means yields are going to be up on the most part, for the most part. TLT, the long bond, down 0.67%. Yield up over 1%, just barely over 1%, and the 10-year up 0.88%. So after 5 days, 6 days down on yields, a 2-day bounce. Let's get to the tail of the tape. You can freeze this if you want to go through it. I'll hit the highlights. So basically the day count is 4 days up, 3-day consolidation now. Big news coming on the inflation and FOMC front. Wednesday before the open, we've got CPI. That's computer. That is consumer product, CPI and PPI. Yeah, consumer CPI for the consumer, FOMC Wednesday, Thursday, PPI, producer price index and consumer price index. 6 days up by the above the 8-day exponential moving average, 7 days up on the 21. Expectations positive as long as we remain above the uptrending 21-day moving average on the S&P and the NASDAQ 100. Our sectors went today. Standouts were oils and utilities, with the dollar being strong on the downside. Banks, especially regional banks, biotech, and retail. Really, the thing to point to today was the outstanding performance by leading stocks. And we added to NXT, solar stock, and we bought TMDX, both in our 2121 list. That's where the majority of our purchases come from. It's not just a list we slapped together. These are leaders in leading sectors in an uptrend, and we focused on the leading stocks from those leading sectors. So bottom line on the day, opening weakness turns green, growth leaders flex. Certainly a good day for the bulls. All right, let's get on to reviewing the 21 over 21 list for the week. So what came out last week? We'll go through what was dropped. PDD, which recovered the 21-day today. So it's still on our universe list, just not on our focus list. GDX, after the terrible day down in gold and gold stocks. CEG dropped, bounced nicely today from the 200 level. Again, still in the universe list. FCX, still below the 21-day moving average. VRT, as I mentioned, nice bounce back by these data center names, but still below the 21 is VRT. And Goldman Sachs dropped because we've got BNKU, which it's a component of in the 21 over 21 list. You see Goldman sitting right on the 21-day moving average there. So let's go through these. The 2121 list by what was up most today, from up most to down most. We'll start off with CrowdStrike. That S&P 500 addition closed below mid-range, but strength confirmed after a really tough sell-off. We got stopped out on this, and this was on the back of other stocks in the group, not particularly security stocks, although Zscaler did have decent earnings, but harsh pullback there. You can see the volume on the pullback too. Things completely changed with the beat and raise, and then added to the S&P 500 breaking out of a nice cup and handle today on 430% above average volume. So good stuff there. That's our largest holding, as I mentioned. Abercrombie and Fitch continues to bounce at the 8-day, up 5.7%. TMDX, we added this today, the bounce off the 21. First Solar, outside positive reversal on this, undercut the 8 and then rallied, close near the top of the range, up 4.7%. It's nice tight, 3 weeks tight on this. We're looking to add to this should it break out above this level. Kava, nice day today, up 4.4%. NXT, we added to this. It's at the top of the cup and handle base. Micron, making higher highs after a 2-day consolidation. Nice stuff there. ELF finally with putting in a positive close after 4 days down, undercutting and reclaiming the 21-day moving average, ran into the declining 8-day moving average. And I really want to see this clear that 8-day tomorrow, as relative strength has not been good on this name. Next up, Coinbase. Nice day today, despite just a blah day by Bitcoin. Coin up 0.3%. Pure Storage making higher highs, up 5 straight days now. Coherent bouncing at the 8-day. ON. Nice gain today, little more than 1%, bouncing at the 8-day moving average. NVIDIA, everybody and their brother, that's not the right candle for NVIDIA today. Everybody and their brother after the 10-for-1 split today, thinking that NVIDIA was going to sell off. Let's look at a 5-minute chart on it. There did have a bit of a sell-off mid-morning, but buyers immediately came in and then it went sideways most of the day, still below this gap up from June 6th. After the 10-for-1 split, you can't tell if that's a bad candle, but really the target for this now is the high from last week, which is 125.59. So nice day for NVIDIA, all things considered. IBIT, tight action today, but up on the day. CCJ continuing. Uranium, the ETFs are lagging, but CCJ holding above the 21. Spotify sitting right on the 21. Howmet, continued tight action for 3 weeks now. Pinterest, nice tight day after 2 strong days up on above average volume. We've got our eye on an entry for this one. SARK, down on the day, not a surprise, with the leaders showing some strength. Bank U, put in a hammer, gap down, banks rallied. We're looking for some strength out of this, or this will get cut. App undercutting the 21-day moving average today. That was the worst performer, and that is a 21 over 21 list. Other stocks added to the S&P 500. KKR with even a better day than CrowdStrike had, up 11.2% on almost 500% above average volume. And GoDaddy, which has been acting extremely well, making a higher high, up 2%. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION. It serves a dual mandate, and that is to participate in market uptrends and pull back. When the market pulls back, we lighten up or just get out of the way in the case of 2022, and especially when you break below the 200-day moving average, because this is where all bear markets occur, below this black line. We have minimal exposure when that happens. But when the market winds are at our back the way we are now, we push the gas pedal down and take advantage of the favorable market conditions. And if you're interested in a common sense approach like this, give us a call. And that'll wrap it for Monday, June 10th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.